Abhay Agarwal, Managing Director of Piper Serica Advisors, who joins us on the first day of the new series and the last day of the current financial year to talk about, well, either the year gone by, the series coming up ahead, or more. Abhay, great having you as always. Thanks for taking the time out. But it's an absolute delight to be talking to you today, Abhay.
No, thank you, Neeraj. With that introduction, I suddenly feel more pressure. Looks like major milestone days. So I hope I meet your expectations.
No, major milestone day coming up. But Donald Trump decided that, hey, he doesn't want April 2nd to be the newsmaker necessarily, because auto tariffs can happen before that also.
Yeah.
But however, having said that, Abhay, considering that April 2nd nomenclature-wise seems to be this really big day, right? The question is that, do you reckon that participants like yourself or otherwise would probably be watching to see the ramifications of what happens and digesting it before taking large positions, or are now markets preempting it? Because it does seem partly that the behavior of the Indian markets more and more is getting kind of disjointed from the tariff announcements.
I think, Neeraj, when the knee-jerk reaction to the tariff announcement got over, I think what has happened now is that investors and analysts are looking for what are the specific concerns for Indian companies and which are the sectors that may get impacted. So sectors like auto export, auto ancillary exports, maybe some bit of pharma exports to the US may get impacted by tariff even for a short term. Now, very difficult to say right now what actions the Indian government will take to mitigate some of these impacts. But I think largely where I would say is that the initial shock of the tariff announcement is over. And now the mood is that, look, let's look at the impact of tariffs when they get announced rather than jumping the gun and acting too early. Because there have been, giveaways or, pullbacks in the tariff threats. There is some quid pro quo from different governments. So I think what will happen is that there will definitely be pressure sentimentally on the market and some of the sectors. But anyways, India is such a small percentage of global exports, global trade, that I don't think it is going to impact us or all the sectors in India or the entire market in India for long. So I think the mood is to look for opportunities rather than worry too much about threats of these tariffs.
Okay. Well, Abhay, the other question therefore in mind is that since we will have tariffs and in a week from the tariff announcements, or maybe while all of that is on, also have earnings start to come in. And from the looks of it, the ones which start the earnings season typically, which is IT, will not have a very great quarter 4, or maybe even the commentary for the year ahead. Is the market, do you think, baking all of this in? Also because, sorry, I'm asking 2 questions into one all the time. Also because in a note yesterday, Morgan Stanley said that the sell side will be surprised on the upside with the quarter 4 numbers.
Well, right now, from whatever we have said, Neeraj, it is looking difficult to see where that upside will come from, because you had Accenture announcing its results, you had Accenture guiding, and that's a industry behemoth, and you have Capgemini and some of the other companies, IBM.
Abhay, sorry to cut you. So just so that I don't get you, make you believe wrong. I mean, they said it for the earnings season at large, not just IT.
Oh, okay, got it. Sorry about that.
No, my mistake. I should have clarified.
So I think in IT, Neeraj, as we have been talking for the last couple of years, we have been fairly negative. We have zero weightage to IT in our model portfolio for the last couple of years. We're not planning to change that because I think, as you said, the numbers will be weak. And I think there will be a lot of defensive commentary built around the budget cuts in the US led by Musk cuts. So I think everybody is going to use the same excuse. Largely what we're going to see is probably a negative revenue growth guidance, a fall in revenues for the next 2, 3, 4 quarters. And I think some of the, investors who see large cap IT companies as defensive sectors or, to justify the high valuation may start changing their view and start seeing them as companies which are behind on the innovation curve, which are behind on the engagement models and pricing models that their customers want to see from them. We're seeing a lot of talk about the customer saying that, look, I'm not going to pay for a 3 to 5 year project. You finish this in 18 months and use the new technologies, use AI tools to finish the project. I think Indian companies, unfortunately, have been behind the curve on that, and even the mid-size IT companies also have been behind the curve on that. So I think unless there is a serious commitment to innovation-led business model, which will require them to recalibrate a lot of stuff, cannibalize a large part of their existing model, I don't see growth coming to this sector. So at best, it will be a sliding, even in a rising market. My view is that IT will not provide any upside to the investors. I won't be surprised to see it as probably the weakest performing sector in the Nifty index for the next 1 year.
That's an interesting take coming in on IT, Abhay. This is Hiral on the side. So, Abhay, would it be right to say, basis your two answers, that the market is not climbing the wall of worry with respect to tariffs? That's one part of it. And secondly, when you have to look at Indian market valuations, with the FIs that have started to come back, the bottom has been formed. We are no more in that aggressive selling spree by FIs kind of a territory. Valuations have settled and they're not as frothy, and this would be a good time now.
Yeah, I think largely I would agree with that assessment. That is our view right now, and that will reflect in the model portfolio change when we make it next week. Both on a fundamental basis and on a technical basis, we would like to believe that the markets have formed a kind of bottom. We don't expect any aggressive selling either by domestic investors or foreign investors. Whatever channel checks we have done over the last 1 month, there are early green shoots. We saw domestic consumption fall off the cliff in the last quarter of last year, post-festive season. And even with discounting, channel inventories across the board were very high. The good news is that with aggressive discounting in the current quarter, especially in January and February, the channel inventories are very, very lean. They are probably half of what the normalized inventory levels are in the channels. So that gives us the confidence that once the demand comes back, and there are early green shoots, when we talk to dealers, when we talk to retailers, there are more inquiries. Of course, a lot of this buying is driven by the year-end discounting, but that's fine. I think the more important thing is inventory is very low in the channel. So next quarter, the auto companies, the home improvement companies, consumption companies will be able to sell more and stock up the channels. So I think that green shoots of consumption-driven buying, consumption-driven growth, and the fact that the US markets have corrected. If we look at the US dollar correction, we look at the US yields coming off, is making it less attractive for foreign investors to stay in the US. So some of that flow has already started coming back. So I think when you marry these two fundamental and technical reasons, we would like to believe that the markets have formed a strong bottom and will head up from here.
Abhay, you mentioned about making your tweaks to your model portfolio next week, but just ahead of that, let's get the retail investors to benefit out of it in advance. What would your bets be?
So one sector, Hiral, we had been very underweight on for last 1 year, especially, and beyond that also. We had no banks and NBFCs in our portfolio. And the reason was that we saw a situation of overlending, which would impact the quality of loan book. And I think it largely has played out like that. But now we are seeing tremendous value. And again, this is a bit of a Braveheart call. This may be a contra call. We're seeing value emerge in the smaller banks. Large banks are fine. I mean, investors will always make money. But to justify our active investing, we are seeing value emerge in the larger mid-sized banks. So if you break up the private banks in India, there are large banks, mid-sized banks, and small banks. So in the small and mid-sized bank, we're seeing some value emerge, and that is why we are looking to add We have already added one bank to the portfolio this quarter, and in the next quarter, next rebalance, we are going to add 3 more. So it will be after a long while that we will have an overweight on Indian banks. So bank is a big space where we see value after this beat down, because as the consumption demand comes back, credit offtake will increase. We saw a lot of people defaulting. They are not willful defaulters, but these are SME borrowers who just didn't have the cash to pay back. Banks had to provide for that. So we expect some provision write back to happen once that money comes back. And so with a 2-year perspective, I think buying small and medium-sized banks in India right now will be a good return generating idea for investors. That's what we are going to do. We are also holding on to our overweight position on large cap Indian insurance companies. On large cap pharma, we are pretty bullish. We continue to be bullish. It was the best performing sector last year. We expect that outperformance to continue this year. And then agrochem in India is another space that we have been overweight on. So these are the 4 sectors, Hiral, that we are quite positive and overweight on in the model portfolio.
Abhay, thank you so much for taking the time out and being here today. Just one request, maybe around April 2 or April 3. I know you've just come in, but once the tariffs come in, you have a great hang up on what could happen to some of the more spoken about sectors, textiles, chemicals, etc. If time permits you, we should do a conversation on what the impact of some of these could be, if there are details, of course.
No, Neeraj, absolutely. I always look forward to coming on the show and chatting with you. So it will be a pleasure, whenever
Thank you so much.
invite me.
Thank you so much, Abhay. Really appreciate your insight.